Welcome to today's market report.
European stock markets were mixed on Friday, with the UK underperforming after weak retail sales data, while investors also digested a number of corporate results, including from Renault and Hermes. DAX in Germany traded 0.3% higher, CAC 40 rose 0.3%, FTSE 100 was 0.1% lower. British retail sales slumped in January, falling 8.2% on the month, as non-essential shops went back into lockdowns. This was the second largest fall on record after the drop in April 2020 at the start of the pandemic, and indicative of the damage Britain's service-based economy is suffering. German economic activity expanded for another 8th month, with manufacturing growing at the fastest pace in 3 years, according to IHS Markit. French factories also reported the quickest expansion since early 2018, though the private sector economy shrank overall. Renault stock fell 3.2% after the French carmaker posted a record annual loss of 8 billion euros. The CEO, Luca de Meo, also said that 2021 is set to be difficult, given the unknowns regarding the health crisis as well as electronic component supply shortages. Volkswagen stock rose 2.2% to its highest in over a year, after a report saying it's looking at spinning off its most valuable brand, Porsche, to unlock value. Hermes International stock rose 5.8% after the luxury goods maker said sales recovered sharply in the fourth quarter, in a sharp contrast to rival Kering, which reported disappointed sales at its flagship brand Gucci earlier this week. In the insurance sector, Allianz stock rose 0.9% after the German insurer posted a better-than-expected 2.2% fall in net profit in the fourth quarter from a year earlier. SSREY stock was largely flat despite the reinsurer recording a net loss for 2020. Attention may also be drawn to a virtual meeting of the group of 7 leaders chaired by UK Prime Minister Boris Johnson. The leaders, who will include both US President Joe Biden and Italian Prime Minister Mario Draghi for the first time, are expected to discuss the battered world economy as well as the group's relationship with China, along with plans to defeat the novel coronavirus. Oil prices retreated on Friday from 13-month highs, whilst in Texas, the US biggest oil-producing state, have started to resume production as the week's unexpected wintry snap passed. The focus is shifting to the impact on refineries amid worries they will take time to resume operations, creating a gap in demand which will likely lead to builds in crude stocks over coming weeks. Crude futures traded 1.8% lower at $59.42 per barrel. Brent fell 1.4% to $63.03 per barrel. Gold futures fell 0.1% to $1,773.10 per ounce. On the FX front, GBP/USD has been hovering close to 140 as the dollar is off its highs. A combination of immunizations and the lockdown has brought Britain's infections and hospitalizations sharply lower. All eyes are now on Prime Minister Boris Johnson and his highly anticipated reopening speech on Monday. If the plan is ambitious, it could give sterling the boost to bring it over the line. GBP/USD continues its upward march, albeit whooping retail sales plunges. That can only lead to one conclusion: cable is showing its resilience and has more room to rise in response to even marginally better data. While more money from Uncle Sam is positive for the global economy, it could push US 10-year yields to new highs. The global benchmark is already around 1.30%, and a move toward 150% would make the dollar more attractive and boost the greenback. More government spending means both stronger growth and also more debt issuance, causing returns to rise. Hitting the 140 level may trigger choppy price action. Many orders are likely placed around the round number above 140. The next Allianz to watch date to 2018, and this include 141.10, 142 and 142.40. Euro-dollar clinches fresh tops in the 121.40 region, whilst the dollar index was down 0.1% at 90.483 after a 0.4% decline overnight, cut short a 2-day winning streak.
This is today's market news. Thanks for listening. We'll see you next time.